In this presentation, we're going to talk about how to determine your probability of winning. Now, what's amazing is that you can determine your probability right down to the exact percentage point, and you can do it before you ever invest a dime. You can't do that with a piece of investment real estate or even on buying a stock outright, so why can we do it with options? The reason is options are based on a formula, and they're actually priced based on your mathematical probability of winning. The less chance you have of winning, the cheaper they are, and the greater chance of winning, the more expensive they are. That makes sense, right? Then why do so many people voluntarily pick an option with a really low chance of winning? It's probably the same reason people buy lottery tickets. They have a low probability, but if they do win, they win big. The beauty of the markets is that everyone has a right to their own opinion on what a stock or option might do, so there's always buyers and sellers no matter what the odds are. The good news is we can use that to our advantage to set up a situation where we win the vast majority of the time. The other piece of good news is you don't have to know anything about that complicated Nobel Prize winning mathematical formula that made the options market possible to determine your probability of winning. The reason is the probabilities are all laid out for you to see on any good option broker's platform. The platform we prefer is Thinkorswim, and they make it pretty easy. You just go to the options chain of whatever you want to trade and select probability of out of the money and delta to quickly see your mathematical probability of winning on any given option. The delta and probability of being out of the money are usually the inverse of each other. So for example, if you had a 75% probability of an option expiring out of the money, it would have right around a 25 delta. The two add up to about 100. That means if you're buying that option, it only has about a 25% chance of making you money. But that's only if you let it go to expiration. If your call option went up any time after you bought it, you could sell it for a profit, and that's what most options traders are planning on doing. But that probable outcome gives you a good idea of what the probability is overall on the trade. And even though there are other factors that affect a trade's value, this method gives you a great way to compare one possible trade against another based on its probability of winning. A good rule of thumb when buying options is to buy deeper in the money to give yourself a price cushion and to buy more time than you think you'll need to give yourself a time cushion. When you trade, you want as much going for you as possible. So in addition to picking a trade with a mathematical expectation of winning, you can also find trades with other good reasons to run in your direction. A great example is you might find a stock that almost always runs higher into their earnings announcement. Then you can buy a call a couple weeks before the company's earnings date to have that trend working in your favor. The stock has a tailwind behind it. In other words, the stock is running into what the market perceives will be a favorable announcement. Another really important tailwind is the direction of the overall market. They say approximately 75 to 80% of stocks run in the same direction as the market, so it's wise to trade individual stocks in that direction as well. Keep in mind, as options traders, we can trade the downside just as easily as the upside. So you want to buy calls in bullish markets and puts in bearish markets to always keep the market wind at your back. Options are unique in the world of investments because you can see your mathematical probability of winning even before you put in any money. For that reason, strategies can run from highly speculative to extremely conservative. In fact, my favorite method of trading stacks the deck so far in your favor, you have a 70 to 80% chance of winning on every trade the moment you place it. And yet your returns are still surprisingly generous. Which brings us to our next video, how to pick a winning strategy.